Hi, welcome to this video. It's on the 2nd of September. It's Monday. We're just going to be taking a look at the Aussie dollar today. Now, in terms of the AUD, we're going to look at it against the USD and the JPY. From our perspective, we see the Aussie dollar as a long-term sell, but we do have a high-impact news event tomorrow, which is the RBA meeting to decide interest rates. The market expects them to stay on hold. Now, if they do stay on hold, I think you could see a relief rally to the upside, but it won't be very big and it will be a selling opportunity. But they do have good reasons, in my view, to deliver a surprise cut, which would again make the Aussie a sell. Now, in terms of levels, we're going to go and take a look at the charts right now. But please do keep in mind, it is my view as of this moment in time. It can, of course, change in line with the market conditions. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, you can get live access to our member center on the link beneath this video. Right, let's go and take a look at the trade setups. Just very quickly before we go to the charts, I'm just going to show you this survey from Bloomberg, which shows the vast majority of banks in the survey expect the RBA to remain on hold at 1%, but there are 4 dissenters. Barclays, they expect a quarter percent cut. So did Deutsche Bank, so did Market Economics, and so does Morgan's Financial. And I think, the actual chances of a cut are pretty high. But the consensus is basically for them to remain on hold. You can see it's 87% for a hold. If we hold, the rally isn't going to be big. We might get a little bit of a bounce, the upside, like I said in the intro, I think. But if they deliver a surprise, you could see a big move to the downside. So what we'll do now is we'll go and look at the trade setups, and we're going to look at AUD USD first. On AUD USD daily chart, I'll draw my levels in a moment. Now, in terms of the Aussie dollar, from our weekly forecast, which you may have seen, we're extremely bearish. We think we could be going as low as 60. So we'll see any relief rally on the RBA as a selling opportunity. And of course, they could spring a surprise. Let's just go through these notes very quickly before we draw some levels. Governor of the RBA, Philip Lowe, has already said the RBA would contemplate QE if other central banks aggressively cut rates towards zero. So he's contemplating QE, not just rate cuts longer term. Also, if the local economy faced a sharp downturn from the US-China trade war, that's obviously very much on their mind. He did say recently, globally, if central banks go to zero, then we'd have to consider that as well. So, rate cuts are on his mind, maybe even quantitative easing, stimulus further down the line. How do the RBA see the situation right now? What's going on? Point number one here. China's startup is accelerating in their economy. No easy or quick solution to trade wars, in our view, which I mentioned in our weekly forecast. China doesn't want to concede. They're going to tough it out. They want to see if Trump loses popularity as we move to next year's elections. Well, they're a good way off, aren't they? So it's going to be very much on their mind. Okay. Also, other central banks are cutting rates in the region, and they're cutting them quite aggressively. And we could see that recently with the RBNZ, who did a cut bigger than expected. So why would the RBA wait? A lot of economists and analysts think, well, they could cut in October, maybe later in the year. Why wait till later in the year? It's unlikely that trade wars are going to be solved pretty quickly, and the Chinese slow up is accelerating. So why not put a rate cut in now? What logic is there in waiting? Well, they may have logic for waiting, and they may stay on hold. That's expected. But I think there's a good case for a rate cut. Now, in terms of there is a relief rally in the Aussie, why not go long? There's no decent expected payout versus the risk. And what I mean by that is I think the rally, I'll do the technicals in a minute, maybe 150 pips, something like that. You've got to risk 100 pips in these sorts of markets, with the volatility. So there's no real good risk to reward there. And also, in terms of speculators, they are short the Aussie dollar, but they're not excessively short. Sometimes you get the market excessively short, you get a stop it and a really big run to the upside. I don't see that in terms of the Aussie dollar. So how would you play it? My own view, coming in fresh, there is a good level of resistance. You can see the Aussie breaks down, chop sideways and trying to get through the level, which is a round number. Round numbers are always very important in Forex trading, as I often stress, because you just get a lot of order flow around them. Can't get through on a closed basis. So a little bit of relief rally could go up to 68, could sell off the level on weakness if we don't get through. If we did get through, so we've got to say 68, 20 or 30, I'd just sell back through the round number, 67, 70, put my stop back behind 69, which is a level be very difficult for the Aussie to take out, in our view. So yeah, that's the way I would play a rally. Of course, you could run on to 69 or up close to it. I'm just selling topping action off it. Okay, yeah, if you're coming in short, be it through 68 or topping action, just pop the stop behind 69, see if it works there, then bring your stop down. Okay, and yeah, personally think 60 is on the cards longer term. So yeah, selling a bounce I think offers a really good risk to reward trade. What about if we don't bounce? What you've got, you can see the candles, they're coming down. Low volatility. Say the RBA spring a surprise, where would you come in the market? We've got two candle tail pokes below a round number, which is obviously 67. Just get clear of the round number, and you'd want to see that tail get taken out, which is at 66.80. I'd go 66.70, stop 68.30, and look for a run to the downside. So yeah, sell on a rally or on a surprise break lower. I'd say also that in terms of big money, big institutions, they will hit on a rally, because the big fundamentals are bearish for the Aussie anyway. When you get a little bit of interest rate carry in favour of the USD, so that would limit Aussie upside. So yeah, sell on a rally or a break lower. Now let's look at AUD JPY, which is a similar trade setup. Right, on the AUD JPY daily chart, and I put it here, accelerated fall on trade war escalation, JPY being the number one safe haven currency. The Aussie's been coming down gently for a little while. Nice big move down, then some erratic candles sideways. Now, in terms of the view that trade wars will not be solved quickly, the Aussie will be a sell on the yen. But where would you sell her? My own view is, if we look at what I would consider to be the real key level, is here. That is a round number, which is 73. So we broke down. That big blue tries to take out the level, then the red, then we drift down. Okay. In terms of in between, we got the 72 level. Just draw a trajectory there. Really, just there. Okay. So my end view is, she jumped up. Let me just get rid of that line. She jumped up above 72. I'd look to sell back through the level or off 73 on any weakness. Stop 73.50, so well back from the round number. Okay, so just take it. If it went a little way through 72, back through 71.70, or if it's stalled up here, any weakness at all. So that's what I would do on a rally. Now, in terms of, just mention my target here, I've got 60 on the downside and a possible run on to 50. The yen for us, we mention it frequently in our forecasts, going into the end of the year, we think it'll appreciate. It's very oversold. We've got a very nervous global financial market, so to speak. Yen number one safe haven. So long way to go on the downside, but obviously, just like with the USD, you could have a flick to the upside. Where would you sell on the downside? My own view is here on that candle body, because what you'll do if you come through this candle body here is you'll be clear of the next round number down. So 71, you'll be clear of it, and it's the level, just forgotten it now. It's 70.65. You can check it out for yourself. I'm sure it's 70.65. So it's clear of the round number. I'd sell through there. Initially, I'd have the stop there, but if we ran onto the downside, I'd bring the stop in behind 72. So yeah, from our perspective, Aussie dollar going a long way down, longer term. Don't rule out the rally. That's a sell, or go for a surprise from the RBA. We'll see how these pairs pan out, and we'll update in our weekly Forex forecast. So thank you very much for watching me as usual. Take care and have a good day.